Hey everyone, welcome back. Okay, so Goldman Sachs CEO David Solomon was on a phone interview with Bloomberg, and he basically said there is a 30% chance that we could go into recession, or US can go into recession in the next 12 to 18 months. And he's basically saying that the chances of recession are, even though it's only 30% chance, but they are already slowing, or they're already preparing for the slowing growth and a decline in asset prices. And of course, this is not good news for the markets because, again, if they are or they're preparing their investors for slowing growth, that means people are taking money out more and more from the stock market. Now, I did a video which I'm going to release this evening. The video show details on the TA side. I'm not talking about the numbers. I'm not talking about the economy. I'm talking about the TA side, how S&P still far away from the 200-week moving average, not the day moving average. So if you open the S&P 500 and if you do weekly chart and if you draw a 200-day moving average, you know what I mean. There are different events that happen. For example, the 2008 market crash, the 2020 COVID crash, or the dot-com bubble. Every time you will see S&P dip below 200-week moving average. And where we are right now, we are far away from it. And along with that, in that video, I shared another very good piece of information. So definitely check that video out. But from what I'm reading, from the Goldman Sachs CEO, it says we have to get rid of inflation. Solomon said Tuesday on a phone call. Inflation is extremely punitive, especially on those that are living week to week, paycheck to paycheck. It's a big tax on that part of society. I think it's very important that we get it under control. Now, we have already seen that many of the big bank CEO are saying that we have to get ready for recession because if it comes, it's not going to be pretty. But the stock market is always forward looking. So stock market have actually priced some of it in already, and that's why I always keep telling or keep saying in my videos that doing a DCA, or basically looking at the stock market as forward looking, is really going to help us, because by the time recession is here, or if we are already in recession, then it's already the stock has already or the stock market has already priced all of that or majority of that in. Of course, there are still chances for uncertain events, like, you know, if Russia uses nuclear or whatever the case is, or supply chain get worse, or China goes into further lockdown. Those things nobody has a control over. But what I'm seeing more and more from these top CEOs and what their economists is telling them, that we are going to get into this recessionary period in the next 12 to 18 months, and stock market every day slowly is soaking that in and basically taking it in. So I quickly wanted to give you this update. The video that is coming out later provides more detail on where the S&P is, what are the technicals saying, what about the 52-week lows for the S&P members, what are the 52-week high of S&P members, all that drawn out in a chart. So definitely check it out. Hope you liked today's video, and if you did, then hit the like button, subscribe to the channel, and until next time, you all have a sparkling day.